Good morning, good afternoon, good evening, everyone. We're reaching across the globe. Happy New Year and welcome to the 24th Emerging Growth Conference. I'm Anna Berry and I'll be your host today. As always, we have an exciting list of companies in a wide range of growth sectors presenting to you today. So just a few notes for those attending. This is a live continuous event. It begins now and runs until 3:30 p.m. Eastern Time. So when we switch to the next company, you'll see a black screen for a moment. Don't go anywhere. It's just us moving over. If you do experience downtime for more than a minute or two, just refresh your browser and everything should work properly. Our platform does work best on Google Chrome. So if you're watching from an Apple device, you have to hit the play button to start the session. All of our conferences are uploaded to the Emerging Growth Conference YouTube channel. Be sure to subscribe at youtube.com/Emerging Growth Conference. Now, during each company's presentation, you can submit questions through the webcast module. The presenters may attempt to address as many of these as possible at the end of their presentation. One last note, after today's event, you'll be redirected to the registration page for the next conference. So stay on or come back to reserve your spot early. Today, we have 11 companies presenting. So without further ado, I'll introduce our first. We have Bannerman Energy Ltd, trades on the OTCQB under the symbol BNNLF and on the ASX under the symbol BMN, and is an Australian and Namibian listed uranium development company. Its flagship asset is the advanced Etango Uranium Project that's located in the Erongo Region of Namibia. Please welcome its CEO, Brandon Munro. Welcome, Brandon.
Thanks very much, Anna. It's a pleasure to be back.
We look forward to your presentation. And remember, to our attendees, you can post all of your questions below for Brandon. Take it away.
Great, thank you. Well, welcome everybody. Thank you for joining us to hear about Bannerman Energy and our Etango Uranium Project in Namibia. What I'd like to do is emphasise where we fit in. We are pursuing social leadership in the supply of raw materials for emission-free power, and in particular, we're talking about uranium for nuclear power. Just at a glance, you can see from that share price that we experienced with the rest of the uranium sector a significant re-rating. It's softened a little, and as you can see right at the moment, we have been oversold in recent couple of weeks. So it is a great time to be looking at the company. We've got a market capitalization of about $200 million US. I'd also point out we're well cashed up for the way that we run, with a bit over 9 million Australian dollars and no debt. Our project is, as Anna said, the Etango Uranium Project in Namibia. It's globally large scale in terms of both its resource and a very significant proposed production of 3.5 million pounds per annum with scalability. It's very conventional and low technical risk, excellent supporting infrastructure. As you can see, we are right in the thick of the uranium industry in Namibia, with very large mines around us and all of the supporting infrastructure that you would like to see. Namibia is an established uranium jurisdiction. It's a pleasure to be there. And we do have very strong in-country presence and respected management and engagement. Now, I'd like to really cover what are the central investment propositions for this company. And they are exceptional scale and leverage to uranium price increases, an accelerated pathway to development, and unique strategic appeal. So in terms of scale and leverage, first of all, we've got a world-class uranium inventory. The Etango resource sits above 200 million pounds, and of that, the Etango 8 development has an ore reserve of about 60 million pounds for a 15-year initial mine life. Now, as you can imagine, as a fairly small proportion of that total inventory, there's significant expansion capacity. That's both in terms of scaling up, and I'll talk about that, or in terms of certainly a life extension. The Rossing uranium mine down the road from us, when that started its life, it had a 16-year initial mine life, and it's still going after 45 years as it goes deeper. And we expect our ore body to perform in exactly the same way. Now, on top of that, we've also got a couple of satellite deposits within trucking distance. So a JORC 2004 resource on those deposits gives us more than 40 million additional pounds. So that means that we have world-class scale and also the advantage of scalability. Now, what I mean by that, what we're looking at there is that is the final pit design for our Etango 8 development pathway for this asset. Before doing the feasibility work on Etango 8, we spent many years developing a much larger, giant-sized development pathway, which proposed producing 7.2 million pounds rather than the 3.5 million pounds. And what we've done here is we haven't high-graded, we're not cherry-picking the ore body, we've simply worked within the initial open pit design of that giant-sized ore body. So that in the blue is the final pit for Etango 8, compared with a midlife pit for the giant-sized, compared with a final pit. So you can see just how available to us expanding either scale, production size, once we're in production, or mine life is. And the way that Etango 8 PFS has been designed is we get into production, we become profitable at that 3.5 million pounds, and then we can consider expanding potentially up to the 7.2 million pounds once we see the market signals that justify that. The PFS that I referred to, we released in August last year, and I'll just talk you through the key outcomes. So as I say, it's an 8 million tonne per annum development, which gives us 3.5 million pounds per annum over a 15-year mine life for a 53 million pound initial total production. Now, the processing yield for heap leaching is exceptional. It's almost 88% on a very low stripping ratio of 2, which gives us a total operating cost, including royalties, of $39 a pound and a 274 million pre-production capital. Now, if we assume a uranium price of $65, that generates a post-tax NPV of $222 million US. We pay the bank back in under 4 years and an internal rate of return of slightly more than 20%. They're very solid economics. They're absolutely robust. There's a huge amount of work that's been put into them. But I'd like to talk to the leverage point here. We are a heavily leveraged company, partly because of the nature of our economics and also because of that scale. So if you look at our sensitivity to uranium price, from that $65, a 10% increase in the assumed price delivers almost a 50% increase in our NPV. And that's the leverage that is really attracting investors who have adopted an increasingly optimistic view of both the uranium sector macro, but also where we could go with uranium prices into the medium to long term. And so when you put the more optimistic uranium prices into our financial model, you start to see how extraordinarily that leverage performs for our company and our asset. So moving on, we offer an accelerated development pathway, and we are relatively unique in this sector because we will be in a position to deliver producible pounds into this cycle, into the upswing that we are seeing unfold over the last year. So we've achieved that partly because there is a huge body of work already done. We've worked on this project since 2005, and you can see a bunch of different milestones there that were driven towards, down in the bottom right, the 20 million tonne giant-sized Etango that I referred to. In the last couple of years, we've been working on the alternative development pathway, which has now culminated in the PFS released last August. And we're well on the way to delivering a DFS at the moment. All of that technical work has been done. We are on track to deliver a DFS in only a year and on budget to deliver that DFS for only 4 million Australian dollars. That's extraordinary for such a large project, but it makes sense when you look at what we've done over the last 15 years already. Now, the other aspect of our pathway to development is we are in an ideal uranium development jurisdiction. Namibia is an absolute pleasure. I can say that because I lived there with my young family for more than 5 years. I've been back there many, many times, and I've worked in Namibia since 2009. Look, first of all, if you don't know Namibia, in this sector it's well known because it's a top 3 uranium producer globally, been exporting from Namibia for more than 45 years. So all of the regulatory capacity, all of the export credentials, all of that is well established. And as I said before, we're in good company with 3 very large uranium mines, being Rossing, Husab and Langer Heinrich. Because of the political support and the social support, it's an ideal uranium jurisdiction. Interest groups and interference just isn't a feature of our business. It's not something that we spend any time defending ourselves from. And unfortunately, that can't be said for most of the first world jurisdictions from which uranium is mined. And it's a key pillar of the country's development agenda. And it's really a pleasure to live, pleasure to operate. It's an easy country to do business, safe, secure, easy to finance. Now, beyond that, we've got established tenure. We've got the ideal tenure for where we want to be right now, which is what's called a retention license, easily transitioned into a mining license when we're ready. And more importantly, we have our environmental clearances. We don't have those potential roadblocks sitting between us and delivering those producible pounds into the next cycle. And this is what it looks like at the moment. We are completing our definitive feasibility study. That's on track to be delivered into the market by the end of the 3rd quarter of this year. And once we have then moved through approvals, engineering, marketing and financing and so on, we want to be in a position to be production ready by 2025, which is when we anticipate the sector deficits in the uranium market to really start to bite. Now, I'll say that that doesn't necessarily mean we're going to roll through and be in production by 2025. That will depend on the pricing that we're seeing in this market and whether that accords with our very optimistic view of uranium and whether we believe that that generates appropriate shareholder value. If we need to hold back to optimize our price, optimize our value, and therefore optimize return for shareholders, we will do that. We are not compelled for regulatory, market, or any other reasons to come into production any earlier than it suits us. But we want to hurry up and wait if that's the case. We want to be ready to go. As I said, we've got extraordinary and unique strategic appeal, and that's a function of a few factors. For a start, we have none of our product that's off-taked. It's open, it's unaligned. We don't have any strategic interests on our register. But also, as I'll explain, the geopolitical situation in Namibia puts us in an unconflicted and unaligned position, which gives us a particular appeal strategically to what is a very strategic industry globally. Now, first of all, we will be a big player, make no mistake. Our global impact at £3.5 million, that's enough to service 7 to 8 gigawatt scale nuclear reactors. In other words, that's nation building. That is the proposed nuclear program for a country the size of Poland. It's a nuclear program that the Czech Republic has, for example. It can underwrite a significant part of China's proposed expansion. From an environmental point of view, that's the equivalent of displacing 25 million tonnes of coal consumption through coal-fired electricity, 64 million tonnes of carbon. And at a local level, we'll create 760 direct Namibian jobs and about, via a multiplier effect, another 5,000 indirect jobs. That is a big impact that we plan to have. From a strategic point of view, and particularly if you're looking at downstream industry players, it's very important and noteworthy that we're conventional, we're simple, and we're low technical risk. And that attribute has been further driven home by a pilot plant that we've operated for 7 years that you can see there in that image, together with a simple heap leaching flow sheet that enables us to have those robust economics that I described. Our Well, location in Namibia is very important from our strategic point of view. Apart from being able to get things done in country, as I said before, I'd like you to understand that uranium is an incredibly concentrating industry, and the supply in our sector is concentrated into really 4 geopolitical blocks. There's the US, which is the largest single market for nuclear power in the world, which has Australia and Canada under its wing. You have Russia, which has the largest export program in the world, and they obviously have significant influence over Kazakhstan, particularly recently, and also Uzbekistan, France, and emerging China. The thing about Namibia, which makes it so important strategically, is Namibia faces all of those geopolitical centres equally. Namibia has been selling uranium everywhere around the world, and it continues to be a preferred investment decision for the French, Orano's there, the US players, China having 2 uranium mines already in country, and any of the other big players that you would see, India, South Korea, Middle East. We can sell to anybody and we can welcome investment from anybody. The final point on strategic appeal is, in today's green finance-driven world, it's very important to analyse the ESG credentials, and we've built up outstanding credentials over more than 15 years in country. We've got an environmental baseline that goes back to 2008 with approvals, as I mentioned before, but also we've got an exceptional social program that encompasses investment in country governance, in education, in tourism, and in environmental programs. And I'd love to cover any of that in more detail in question time. So let me now turn to the uranium sector, and I'll talk briefly, and I'm happy to come back to any of this during questions. So what's really changed very recently is that we now find ourselves with a nuclear sector that is being embraced by the mainstream. So first of all, there's some key dynamics in the uranium sector that are driven by really 3 dominant economic paradigms around the world. The first is climate mitigation. The second is we're moving into an inflationary environment spurred by expansionary monetary policies. And geopolitical dynamics are as tense as they have been since basically perestroika, since the collapse of the Soviet Union. Now, they all impact uranium in a number of different ways, and they've led to a strong sentiment switch over the last 12 months that I foresee continuing. And even amongst the market uncertainty that we've had in the last couple of weeks, I don't see any of these fundamentals being shaken by the factors that are unnerving investors over the last several trading sessions. So first of all, the world's largest economies have committed to climate neutrality, and nuclear power is the superior energy alternative for any of those large economies. Electricity growth has grown dramatically and is forecasted to grow dramatically, creating a greater need for clean baseload that nuclear offers. China's grown tremendously in terms of its current and future nuclear programs for those reasons. Small modular reactors and new technology are proving to be a game changer for the sector, both in terms of a positive penetration for public sentiment and public opinion towards nuclear, but also non-power applications such as heat, hydrogen production, and hard-to-abate industrial climate mitigation. And we'll see a lot more from SMRs over the next several years. The inflationary environment has supported uranium from a commodity super cycle and hard assets perspective, and that's now drawing in generalist investors, as we've seen from the influence of the Sprott Physical Uranium Trust. That geographic imbalance adds an X factor to an investment in uranium, and we're just seeing unfold the potential for a catalyst in the nuclear sector as it starts to qualify for green finance funding around the world. We've seen in the last several hours the EU confirm that nuclear will be part of the EU green finance taxonomy. The same is in place in Russia, in China, in the US, and expect other markets to follow. So they are key drivers that find their way into the mix that has been driven by this number of economic paradigms favourably for nuclear energy. Now, what's changed very recently is COP26 has been a watershed for nuclear power. And I'll just highlight a few of the more significant announcements that have come out in that time. The US has announced and completed through Congress the bipartisan infrastructure bill. Huge support, particularly for maintaining existing reactors. France has based its industrialisation around conventional and SMR new technology nuclear reactors, including a big go at hydrogen. China's announced that they will build 150 reactors over 15 years. That's 10 reactors per year. That's more than the Western world has built in the last 35 years. And the UK, in the words of their energy minister, on a mission for fission. They're basing their clean energy around the advantages that nuclear can offer. So look, in summary, and what does all that mean for an investment in Bannerman? As I said, we've got the scale and the leverage. We have world-class scale, we've got the scalability, we've got robust economics, and we've got exceptional leverage. There's an accelerated pathway to development. We've got a huge body of technical data where in Namibia we have environmental permits and we are in position to develop by 2025 if that's what we choose. And finally, the strategic appeal. We have a big impact on the world. We're low technical risk. We're in the ideal jurisdiction, and we do have excellent ESG credentials. So that's what I wanted to cover off from a Bannerman and the company perspective, but delighted to take as many questions as you've got. So back to you, Anna, with some questions, we hope.
All right, thank you for that presentation. Let's get into these questions. From Marshall Arlen, do you have any M&A plans?
So look, if we had specific plans, that's not the sort of thing I can discuss, of course. What I would say is that this is a sector that's ripe for consolidation, and it has undergone a very limited degree of consolidation so far, which I find a bit surprising. The reasons why consolidation are important in this sector is that there are a number of projects that appear at first glance to be ready for development, but the reality is, as I said, there's only a handful that can deliver producible pounds into this next cycle. But it's very important from a utility and end user perspective that companies can demonstrate long production plans and ideally a pipeline. So we will see consolidation as groups start to establish a number of uranium projects that they can bring on board over the next 15, 20, 25 years. Because remember, that's the time frame that nuclear fuel buyers think in terms of. They've got a product that needs to be fueled for 80 to 100 years, and longevity is very important.
Thank you for that. Carol Morgan wants to know if you can talk about uranium versus other power sources like solar, wind, and with regard to their growth potential.
Yeah, look, that's a great question that I'd love to address. So uranium should be in every energy mix complementing renewables such as wind and solar. The reality, and this isn't well understood by the average man and woman in the street, the reality is grids cannot function on 100% renewable energy. The storage isn't there. I've worked in commodities that are destined for battery storage, and there simply isn't enough of those minerals in the earth to provide the degree of storage that this world is heading towards on a heavily intermittent renewable basis. And that's where nuclear comes in. It offers baseload energy. It has now proven to be the cleanest, lowest carbon emissions of any energy source over the full life cycle. That includes the mining of uranium. And a UNECE report came out in November confirming that. Lower than solar, lower than wind. It's got, believe it or not, the best safety record in the world, and that's been proven in terms of calculating what's called the death rate from all of the power that's produced as a proportion of that power. So less than solar, less than wind. And the economics across the life of a conventional nuclear power reactor are competitive with solar and wind, particularly when you take into account all of the additional firming and system costs required to create a reliable grid that has a large penetration of solar and wind. So it needs to be part of the mix, and that's the mainstream acceptance that we are seeing as policymakers and governments and their jurisdictions and constituencies start to understand that nuclear has to be there if we're going to have a chance of tackling climate change.
Right. Benjamin Mole wants to know if you can talk about any current partners or JVs.
As I said before, we are unaligned, so we don't have any commitments towards partners, JVs, strategic investors, offtake agreements. And we feel that the market needs to tense up a bit more before we would want to make those commitments. We see spot uranium in the mid-40s. We think it's got a long way to go, and we would want to see that action start and develop and ripen a bit before we would want to make any committed steps in that direction.
Lisa F. asks if you can go into your current financials a bit, capitalization, sales, forecasts.
Yeah, so we're a mining development, so we don't have sales. I wish we had revenue, but that's where we are in the nature of the company we are. Market capitalization, about $200 million US as we stand at the moment. Cash backing just over 9 million Australian dollars and no debt.
All right, that's good to know. Glenn Bowen asks, when you talk about being heavily leveraged, what are you using for collateral? Is it land assets or other assets?
So in that sense, the collateral is our pounds in the ground. So for that 200 million market cap, we've got more than 200 million pounds of uranium as our resource. So you could say that offers a form of leverage. $1 per pound is very competitive across the uranium spectrum. But I'm talking about specifically the NPV, net present value leverage, to the uranium price. And in the presentation, I mentioned that for a 10% increase in the uranium price, we get a 47% increase in our net present value after tax. So that's a leveraged effect, and quite an exceptional leverage effect for this sector.
Historically, what stage in the cycle has M&A and uranium been the strongest? And where do you think we are relative to past cycles in that respect?
So typically strongest as prices start to put pressure on the supply chain. And we're a long way from that still. Prices are $45. It's not even at the point that incentivizes new production. We've got significant deficits coming into this sector because of demand growth, but also depletion of old uranium mines that are running out of ore. So we saw that during the last bull run when prices started to go above $100 a pound and peaked at $136 a pound. The other thing that I'd say about M&A and maturing of M&A, the most spectacular mergers and acquisitions and takeovers that were completed in the last cycle were cash takeovers in Africa. So Mantra Resources, more than $1 billion. Uramin Resources, more than $2 billion. Extract Resources, which has the Husab uranium mine 20 kilometres from us, $2.4 billion. Now, that's no coincidence. It's because Africa is the place where the most cashed up players in this sector, they're the nuclear industry, they're the people who have $100 billion investments in nuclear power fleets. Africa is where they want to own their uranium mines. it's too hard, or in many cases illegal, for many of those countries to own a uranium mine in the US, in Canada, in Australia, for example. So they go to Africa, and that's what I would expect to be replicated as this cycle picks up momentum.
Fantastic. Well, Brandon, we do have a few more questions for you, but we're out of time, so we'll send them directly to you after this presentation. Thank you so much, and we look forward to you joining us again with some of your great updates.
Terrific. Great to see you again, Anna. Thank you.
You're so welcome. Okay, everyone, stay with us as we transition to the next presenter. We're coming right back.